Hello, 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 hello. What's going on, boys? So this is going to be a quick little recap on the trades that kind of ended off my week because we had CPI today, and then I was waiting for the CPI reaction to really start giving me a vulnerable opportunity to then take execution off of, right? And one thing that I really want to emphasize is the semiconductor market, the industry as a whole. Um, One thing about these charts is that whenever you start finding names like AMD, right, they're getting these high volume consolidation breakouts after their post distribution phase over here, right? We had January OPEX at the end of January, and then obviously this led to a GDP breakout after this whole entire range was absorbed. And then from there on out, there was little to no consolidation, really heavy volume, probably counterparty orders kind of matching this area over here. And then from there, that's whenever we started to get the breakup and then the major signal candle, right? There was a lot of um, really saturated alongside sentiment within semiconductors, especially after this breakout. And then that's typically whenever they start bagging a particular side, they cook a lot of the call options and then they obviously flip short. Um, and obviously sell equity and then dealers remain short from there, right? That's kind of how this started to become a very vulnerable short opportunity. We did fail the previous all-time high that led to the breakout level itself, and then we got this whole entire distribution leading into Q2 of 2024, right? So whenever we're looking at this, and then you get your secondary, your final gap down, and then after that you get your secondary like higher low after our first higher low within the 2024. This is whenever you start finding, okay, this could be building out a reaccumulation or at least just for some relief, right? We have a lot of imbalances left behind in the chart. We have this little daily hidden bear gap within over here. That's whenever the redistribution started to try to take an attempt over here, and then they couldn't quite necessarily push this thing down. What they more or less did was really chop this thing out, weed out a lot of premium, set this thing up for another move off after a reaccumulation on higher low after higher low after higher low. Boom, boom, boom. And then from there, that's whenever it started to find the breakout, it broke lower high trend. What I mean by lower high trend would be lower high, lower high, lower high, lower high, and then we saw the pop, right? And this could be money rotation into some other semiconductor names because they don't always follow the same general basket. There was a lot of underperformers when like INTC, um, even AMD within the first second half of 2024, right? And then you look at a chart like NVIDIA, right? NVIDIA is a chart that has just been on a tear. We had this failed distribution that led to a reaccumulation right over here on April 19th. I believe this might have been an OPEX date. I can't necessarily fully remember, but what this ultimately led to was just a break higher and then the earnings set an even higher, really heavy volume gap up into price discovery. And then we obviously got the expansion. We never got any clear breakaway gaps over here. One thing that I do like to talk about is whenever you see gap up and then gap up and then gap up and then gap up and then just these consecutive green days after green days after green days, typically what you're going to find is really aggressive really aggressive profit taking and then a quick liquidation. And then obviously they reevaluate that inventory that they sold off at levels that need obviously more tests off of. And then obviously from there, that's whenever they start saying, hey, okay, what do we want to do with this sell order that we previously had up here that we could take action on to obviously reaccumulate or sell it off even harder. Typically what happens is structure develops where wherever the distribution kind of starts from and wherever the high volume kind of kicks in from is typically going to be where the draw is to, right? So whenever you get like a break in a higher low trend and then you start getting these breakaway gaps like all the way up here, and then you get a mass absorption candle that looks like something like this, the top of a trend where the volume is relatively high, and then you get these consecutive breakdown candles, and these like breakdown looking gaps where you break down 3 days consecutively. Then what will likely happen is that if there was no consolidation on the sell-off, this is going to then kind of reaccumulate or just digest and then push its way higher back into where higher low trend was failed, or where there's any sort of imbalances within the chart itself. If you want to look at like hourly capitulation candles, really heavy volume, and I do have a good example of this, but what this all was just really, 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 really bearish volume patterns where we got this consolidation. We never really closed any sort of bear gap, and we never got any true strong daily print. What this more or less was doing was kind of just cooling off, digesting until our next data set essentially could find enough counterparty liquidity to match where the to match where the I'm sorry, I just got a text to match where the uh, I can't even remember what I was saying, man. Anyway, yeah, what I was saying was data sets typically generate counterparty liquidity, exit liquidity, entry liquidity for the trader that wants to get out in mass size, right? So whenever we're looking at this over here and we say, oh, okay, let's go into our hourly. Let's take a look at this was another breakaway gap. This was a parabolic short setup where it gets super extended away from moving averages and Bollinger Bands and shit like that. I don't really use any of that kind of stuff, more or less just price action and volume. But yeah, this really goes to show you how whenever you get the gap up is then likely going to be distributed and then it's going to lead to a very violent sell. That very violent sell was into this little range of support that was over here, and then that's whenever we start to see the cool off, the digestion, and then this is whenever we start to climb higher with all of those semiconductor names that were dispersed from the overall industry, those being like INTC out of these mass accumulation bases. This would be one of them right over here, how this was kind of playing around with 20 or early 2023 levels, early to mid 2023 levels, and this goes all the way back into 2022 levels where we did find this little cycle low over here. And then whenever you start finding the expansion, that's whenever the semiconductor basket starts getting strong as a whole. However, NVIDIA just never was really that strong. It was more and less just kind of moving its way higher ever so slightly, not a lot of volume, no strong intraday buyers. This was the strongest intraday buyer that never swept this internal liquidity and this external high that was sitting right over here. So whenever I'm looking at this, I'm saying to myself, okay, we get the breakout candle, and then obviously that looks like it's about to fail. This fills the daily gap, and then we start finding a notable seller with no true notable buyer really coming back in on this day of action. Following day, we get a gap up. This is the day I actually lost on, and then I mitigated this very well back into like break even or a small win over here. But this is all kind of just pushing its way higher. Like I said, where back into? Well, this is the breakaway gap. This is the overall initial gap that kind of started the distribution. As you can see, there's a very imbalanced candles over here. This was a very aggressive sell-off with a lot of volume behind it. There was 27 million volume just traded on this singular candle over here, right? So typically what is going to happen is that if this range doesn't have enough like first of all, there's a couple of reasons as to why we couldn't reject. I'm not going to get into all of that, but if there's not enough, let's just say, of a heavy auction over here to be able to sell this thing off further, then we have to go for this high or we have to go back into the range of where we previously distributed from. That's kind of just how the market works because whenever you get a gap up and an imbalance in the chart and then you obviously capitulate directly through that gap once again, that means that there is going to be leftover orders within that general range, right? Institutions, what they like to do is trade passively with on the bid or on the ask. So whenever they're trying to buy, it's going to be at the lowest point possible in which they can receive those like those just like if they can receive those shares beneath a support that quote unquote support breakdown or um, and then they rip it back higher off like a spring or some sort of UTAD or some sort of false breakout or some sort of like sentiment driver just per se like like I said, a major gap up. That's the whole idea behind this, right? A major gap up leads to a lot of people like chasing price, FOMO, and then they just rip it back down. And there's a lot of counterparty liquidity, aka buyers in this sense, to be able to match that, right? So whenever we go back and we look at the chart, I'm just looking for a simple lower high. Where's the lower high going to come off of? Well, we know a couple things. Like I said, data sets, heavy data sets that kind of move the market. What they do is they generate counterparty liquidity. Um, they are able to move the market counter trend. They're able to move the market with the trend. And this was just a favorable short side trade, given the fact that it was pushing into where this ma massive sell candle and a lot of volume poured into it in the first place, right? So, with that being said, whenever I saw these three consecutive little to no healthy consolidation, little to no heavy buyer off of it, that's whenever I started to say, you know what, this is likely going to pull back. It's probably going to pull back into this range of a retest, which is going to be 128, and my initial target was 132. 132 was, let's go to the 15. And you guys see how 132, 131.50 actually was like my target, which is right on the overnight gap, right? Right over here that started on the 10th. So that was something that I didn't necessarily care as much for the actual target. I just wanted to de-risk the position and see what would happen off of that spot. And then we found a lower high into the 1030 volatile clock change right over here. And all this was really doing was finding its first lower high because obviously trends, healthy trends for sell side or buy side, just they need lower highs, they need higher lows, things like that. This got the pullback. It had a nasty rejection candle and then it broke through the overnight gap. It actually rejected the overnight gap area. And then we were pushing back down into beneath the 130 daily gap right over here. This was also some sort of breakout spot. And then not only that, but what is beneath this low, guys? Because you always want to look at like lows that developed trends. There was an overnight gap here that didn't quite fill. What it more or less did was just get a really heavy volume 15-minute hammer, um, ever so slightly above the overnight gap. And then it kind of just climbed its way higher into CPI. CPI is what kind of started stirring up this downside move, and then that's whenever I started to take ads at higher highs over here, with my risk being above 135.58 into like 136, right? So this was a really nice fade right off the open and a really nice opportunity to start averaging down. Um, and yeah, I was a little bit red right off the open, but this went back green and in profit, stress-free within no time. And then that's whenever I was able to take really nice opportunity to get this thing down into like 128.65, at least 131. 132 I wasn't even thinking about scaling over here whenever we broke beneath 132. And then we filled 132 on the lower high, right? So it was a very clean trade where 132 was my initial target. Like I said, we got beneath it, and if that's my initial target, we're beneath that, closing candles beneath that area on really heavy volume, then that's going to be my new trailing stop on the whole entire position. XOM is if you guys watch a recap, I wanted to really emphasize XOM just because of multi-week pullbacks, multi-week mitigation from a particular side, because mitigation can in any financial market, any sort of any sort of like crypto market, whatever it is. I mean, I don't really understand a lot about crypto, but let's just talk about like how this kind of works, right? Whenever you get a very outsized move that takes out all of these external highs over here and you start finding the pullback then leads us into obviously a discounted range. Take your low to your high, that's your discounted range. And then from there, we start finding a buyer off of the discounted range. Now, I always like to talk about premature campaigns kind of being built that lead to new lower lows, and then obviously sentiment shifts. That sentiment shift then generates, like I said, counterparty liquidity. So in this sense, whenever sellers are, it's in a short-term sell-side trend, buyers are essentially trying to capture more overzealous sellers to then match those orders, absorb those orders, and then obviously there would then be a lack of supply, right? So whenever we get into our discounted range, whenever we get into these little hidden gaps that are over here, this is an example of a little hidden gap right over here. We start finding a buyer, right? So 108.32 was the spot. Just because of this little hidden gap beneath, like I said, this is beneath the um, equilibrium, right? The discounted range, which is an entry that I always love to have. And this overall trend took how many days on end to formulate and make a progression on? 66 days with only a 12.5% drawdown on the underlying from here at this pivot low back up to the pivot. Back up to the swing high. This is 29% move on the underlying in 81 days. So this is a very much more outsized move with a lot more progression from this particular side. There was little to no consolidation, guys, as you could see within this overall sector rotation on this whole entire trend up. And then we started to find the profit takers, the sellers kind of step in. Mag 7 took over momentarily over here, and then that's whenever we start to see the pullback, the drawdown, and then the fill of some of these imbalanced areas in this overall imbalanced trend, right? So this was no true retest, but what I was more or less looking for was just a buyer to kind of appear, and then we get the OPEX volume. This was kind of just a massive sell-off into the close on this OPEX day. That being right over here, I believe. Yeah, is this it? Yeah, so this is the OPEX candle that started to sell us off. And then from there, the next following week, we get a new week, new tape, and then we gap up and we have a really strong tape. Look at this day. There was just little to no sellers kind of left over. And then we kind of get this healthy consolidation off of the previous day high, leading into Tuesday midweek, which is always healthy. And then from there, that's whenever we start to absorb this little resistance through pre-market. And then we move our ways lower. We take out previous day lows for strong, healthy, hourly higher lows, and then that's whenever we start finding the higher lows, and then the trend and expansion higher, retests go, and then we start formulating a new resistance off of trading day highs up here, right? So whenever we go to the daily, that's whenever you're able to see that trend, and then we start getting into lower high territory. This is a hidden daily bear gap, right? So that was a clean rejection point. This is whenever I took XOM calls from over here on these higher lows into this up here. That was a really nice move, a really nice win. I think 140% on those calls. And then this started to pull back down. However, whenever it pulls back down, what are we looking for? We're looking for now a higher low from this low that filled the gap, found a buyer, and then found, like I said, a little hammer candle that led to a break back above, and then a close ever so slightly beneath, and a new week, new tape. Come Monday, June 24th, we get an absolute ripper. What this does is then kind of consolidates, really no true strong higher low, kind of just consolidates there, gets a very weak looking push back into this daily bear gap setting up here. That's whenever we start to pull back right into CPI, right? I love to talk about how Mag 7 looks like it's getting, sold off again. Looks like that seller's reappearing off of those top heavy distributive candles like NVDA, for example. And you're getting these really outsized moves within the overall tech market. So where is the transition going to be into? I like my chances with this ZOM trade just because, we have a nice confluence of this previous low that was a failure to base beneath. Um, if you want to take low to high, you could take a look at that. This is well beneath a discounted entry, right? It's actually beneath the 618, which wasn't the most comfortable thing in the world. But whenever you're looking at this on the 15 and you really just conclude to yourself, hey, look, we have regular trading hours and we're kind of pushing off of this little gap that's filling, and then we're holding it, we're consolidating, we're getting strong closes off of it, we're gapping back down, we're buying it back up, buying the dip, and yeah, it's a really nice trade for this to kind of move back into areas that um, we're kind of failing off of, or to move back into areas that are just, short-term resistance areas, things like that. What my risk would have been over here would be like a 15 or like an hourly candle closure beneath 110.76, depending on how it looks. So I really do like this chart for the future. I do think we could take this thing probably back up into 117.26. If we can't, it's not a big deal. But yeah, that was a XOM trade. Execution plus risk were both down here off of the 111 to 110.76 area. Alrighty, so, oh, by the way, if you go into the 15, this is, like I said, an overnight gap right over here that started to be accumulated off of. So whenever you're looking at this and you find buyers putting in higher lows off of it, claiming it, and then bidding it, and then finding strong closures off of it, and then you get the following day gap down. I'm looking for the same exact thing to kind of happen, or just a higher low from this little shakeout down over here and this retest, which is kind of just like a retest like this. And yeah, so I really do like this chart, kind of to move its way, like I said. If we could get if we could get it back up into like 115 area, I'd be more than happy. And probably done with it, to be honest. Um, so that's XOM, that's NVDA. We do have a couple other ones. Um, I don't know which ones I really want to recap because I don't want to make this video like extremely long. I guess I can do Rivian, even though like the trade wasn't like the biggest size in the world and the cleanest feel. I didn't get the cleanest feel for this thing, but I guess we can go over it. Rivian was kind of just record high volume on this report. I already talked about this, that's why I didn't really want to review it. Record high volume on this report. I talked about riding shorter expiry into the $17 range. Um, that being just because it's Rivian, why would my price target be extremely small? That just doesn't make any sense. What I'm more or less looking for is an outsized move on a name like this, especially one that's an underperformer with potentially the semiconductor theme kind of making its way. Or I'm sorry, I'm so tired with the electric vehicle theme kind of making its way back into the market. There was a lot of negative sentiment within the overall sector, first of all. So whenever you get such lopsided sentiment, typically what it will lead to is a really outsized move in the opposite direction of the sentiment, that being Tesla. And I gave you guys Tesla before it rallied. Now, this is one of them charts that was kind of just moving its way back into a resistance. Therefore, I thought the money would kind of start rotating into Rivian. That being said, what happened was we kind of looked like we were getting this little hourly flag off of what would be a previous swing high. And then from there, that's whenever we started to get the breakout, a failure to base off of that level. And then obviously news kind of sent this thing flying downwards after they sent it into a vulnerable range to be able to come out with news. For those of people, my students who understand what that means, I think you should. Um, so then we just go over to Rivian, right? Um, Rivian was just a really nice trade to be able to execute off of. If you go into the hourly, this is where I took it. So whenever you go into the hourly, Monday, we got a really nice strong move right off the open. And then from there, that's whenever we got the break, and then the base, the retest, and then the move higher right off of 15. Whenever I started to see this move right off the open, that's whenever I started to say, oh, okay, here's 945. Here we are, 945. What it kind of did was push its way down and then find a really nice reversal looking candle and like a higher low, and then it looked like it was primed to get through this resistance. It did get through there, and then that's my new trailing, and then it found a higher low off of that area, had a really nice strong close, and then I just look for hourly higher lows ever since that. That's exactly what we got. And there was really no previous like the day low that was like breached and then broken and then based. There was no really true strong resistance other than this 1230 hourly candle, which kind of caught my eye, but like I really didn't care. Um, and then I was just trying to hold on for this thing as long as what I can until we kind of made our way back up into. Keep in mind, this is a massive gap over here, so whenever we got above this gap, and even if you go to the daily, you can kind of see how we got the daily print closure right above that. Now what I'm looking for is low days and prints to be above this level on the daily, as well as low days to be put in off of that previous gap that is now being claimed and held for a move higher, right? You can even see how whenever we kind of got the loss of that area, that's whenever it led to the new sell, and then we kind of rejected off that spot, reclaimed back into that spot, and then I kind of just carry this thing higher back into the $17 range. Very simple trade. I talked about uh, what else did I talk about with you guys? XOM. Um, I had some other small positions, but they weren't anything that was like a super good example. I mean, I took Moderna further out, much further out calls that are green, and then some shares on top of that, but that's not anything that's like too. Oh, I mean, I had AFRM lottos. I could go over the AFRM lottos. Uh, Pretty sure that's like kind of self-explanatory, but yeah, I mean, I'm just gonna go over XOM and NVIDIA because I'm quite tired. Um, there ain't really much more that I have a great example on. I did have Snap, like I said, into 1745. That just ever so slightly neared the target, and then I realized some of that, and then unfortunately the rest of that um, saw some drawdown and went back into break even from where I was green at. That was a little bit of like a further out, like 3 weeks out of time on that one. Um, Already recapped DoorDash, stuff like that. And then I was really interested in a Marvel short. So whenever we go to Marvel, I've been telling you guys about how this is distribution for like the longest time. Okay, so whenever you're looking at this and you're getting a volume spike, however, the volume spike is into all of this, these series of highs that are over here, and then we swipe those highs, and then we really never try find any strong claim above those highs on the hourly. It's a fade, just because there's a lot of seller dominance within this chart. You're getting really heavy volume capitulation after this earnings report, and then really low volume bases down here at these higher lows that lead to then ever so slightly a move higher back to the tops of this candle. And then it sells off again, finds really low volume bases down here at these higher lows. That's OPEX volume, I believe. And then it kind of just finds these really low volume rallies back into this range up here where lower highs would be. And then you get another failure. Um, I would not be surprised to see this remain a fade until we get beneath this level, 67 bucks. So that's going to be a focus for me if it really starts to set up with like a really slight pullback, maybe an inside bar. But that was a fade that I actually missed just because my NVIDIA trade was going really well. And that would be it.